Hey guys, good evening. This is Alex at Prep Rating. Hope you had a great weekend. We're able to recharge a bit and ready for the potentially and very interesting week ahead. So let's look at the market, especially how we reacted to Jackson Hole on Friday and what it could mean for this week. So once again, let's start with the S&P 500. We're still in confirmed uptrend. And yeah, before Jackson Hole, we saw that rejection of the mid-July and end of July structure. So that was kind of our base area. So we're basing inside that price range. So Thursday before Jackson Hole, we had that rejection action. Um, and I was really looking at which side were breaking of that range, of that tight range. Were tight for 1, 2, 3, 4 days. Um, so either we were to break lower from that range and potentially complete some kind of pullback as we retested the moving averages, but instead the market reacted very nicely to Jerome Powell's comments, and we broke out to new highs out of that 4 days tight range and to a new high. So very constructive action. Let's see if it does follow through early this week. But at this point, just like we discussed last week, at this point, I really follow price action first. All moving averages are now up. They're in line, and price is surfing above all moving averages. So even if the market remains overbought and extended, so short-term Brett did make a new high on Friday. We're beginning to see a midterm and long-term Brett being overbought as well. But just like we discussed, and if we take back recent historical action of November of last year, we did this very similar and pretty much the same action for over a month and a half even. So I keep that in the back of my mind. But when we're really getting into a strong market, a strong trend, I really want to focus on price action first and rely on this breadth extension for potential divergence. So when the trend will get tired and you'll see breadth breaking down, so that will be some kind of red flags to look for in the next few weeks and months if we do follow on that trend. Uh, so apart that, breadth is still looking very solid. Net new highs are still increasing and back to July's levels. We do have more room to the upside. If we look back at last November, we were in the 95 to 100 new highs. So that's something that we might see pretty soon if we continue higher. McClellan summation still trending very nicely above the 10, so nothing to worry there. McClellan oscillator is pretty consistent at these high readings, but not breaking down and that extreme level yet as well. So, like I said, let's focus on the trend, on the price action until we get some weakening in breadth and divergence in breadth as well. So that might give some early clue of that trend is weakening and some red flags to um, reduce exposure, to be a bit more defensive. But until then, don't fight the trend. Prices first, and that's what we want to see: a clear base breakout to new high and a reconfirmation of the trend after the very wild pullback that we've got at the early August. So yeah, that's pretty much it for the S&P 500. Let's cover quickly the Nasdaq. So Nasdaq is still in rally because I don't have the 21 above the 50 yet. But other than that, it's looking great. We had that two leg down correction, V-shaped recovery, and right now we're trying to build that very tight range. I really like that action. 1, 2, 3, 4, 5 days of tight action. Friday was inside, so the 21, the 10 is above the 21. The 21 is catching up on the 50, and we're getting that tight consolidation above all moving average. So if we do break out above Friday's high, it was an inside day, as we said. So if we break higher from there and out of that range, we're likely to reconfirm the uptrend and maybe start that new uptrend as well. So that's definitely something to look for. Breadth extension is way less than the S&P 500, so we have more room to go to the upside in the tech area of the market. So that's very interesting. And finally, I want to show a small cap. So Jerome Powell's had a pretty dovish tone on Friday, so opened the door to rate cuts at the next Fed meeting. So yields were impacted, and for that matter, all groups and industries of the market that are more rate sensitive did very well on Friday. So we saw some nice breakout, nice range breakout, nice reclaim of moving averages. So those are not leading sectors, but they might offer some really nice opportunities in the next few days and weeks, as we might see some rotation of money back into these groups. So that will be my focus this week, to focus in the for now I identify the solar team as being potentially an area of the market to see some rotation back, but definitely look at these more rate sensitive groups in the market. So small cap also are more rate sensitive. So that's why we saw a clear range breakout to the upside on Friday, that we were building above all moving averages. So this is really constructive for the smaller caps in the market to see that action on good volume. We also see net new highs increasing and expanding, and along participation. So breadth is expanding. We have the McClellan summation index starting to trend higher above the 10 moving average, that just starting to round up a bit. So we're still very early for the small cap. So I really like this area of the market for opportunities. All right, so let's keep it short and sweet again tonight. So overall, don't fight the trend. This was very constructive action on Friday after Jackson Hole. I think that the strength and momentum might be in more smaller caps name from here, and more rate sensitive groups. But overall, tech and the broader market is looking very constructive, and yeah, everything is looking good despite the overbought and extension in the S&P 500. So I hope you have a great evening, a great week ahead, and yeah, take care. Bye bye.